Hello, and welcome to another day of TA the Degen way. Well, today I want to do something a little special, and I want to talk about how it is that I use the Gann box and the octave method to find high quality points in both time and price to look for reversals. And if you stick around to the end of the video, we'll hop onto a 1 minute chart. We can use these on any time frame: the daily, the hourly, the 4 hour, 15 minute, and yes, the 1 minute. And it's these two tools that I use in my forecasting to come up with high quality points in both time and price to look for reversals. Now, there's no magic holy grail. These things are used in conjunction with just regular basic technical analysis. But here's a chart. If we look at IMX, this was posted, it looks like June 23rd of 2023, so approximately 9 months ago. Excuse me. And if we press the play button, you can see very, very accurate. And we'll just hop on the Bitcoin chart in just a second here, and we'll look at our recent price action. Then we'll just do a demonstration on a 1 minute chart and just show how accurate these two methods really are at coming up with these areas in time and price. So here, we have a time tick. This time tick was given by using the octave method, which we will go into. So let's hop right over into the Bitcoin chart. So here we're on an hourly chart, and you can see I got this momentum curve. And if you stick around to the end of the video, we'll do some 1 minute demonstrations of how to use this to find where should I be looking for reversals. The point of using these things is to pinpoint areas where you can watch the price action and excuse me, and whatever your trading method is, as far as entries, whatever your entry signals are, if they're indicators, or I prefer candlesticks and just price action, is to look for these things to occur at these price levels and these times, and they are very, very accurate. So if we stick around to the end, we'll do some local TA as to what's going on up here. Well, we'll see some here. So let's talk about the Gann box first. So the Gann box is up here in the upper left corner. Where we want to start from is it's the market extremes. It's the swing high and the swing low. We could take this swing low, and this high. We could take this low and this high. But the bigger the swing is, the more time you're looking at. And so what we want is we want to start our Gann box right down at this swing low. We want to click right at the bottom, at the low. And you can see I've changed the stock settings on my Gann box to not have the wild colors in the background. So if you double click this and go into the settings, you can scroll on down and just uncheck the background, change it to one solid color so it's easy to see. I untick the 236 and the 786 in both time and price. It's not that they don't excuse me. It's not that they don't serve a purpose or that they're not useful, because they are. It's just that what makes this tool useful is that things, for whatever reason that mankind just does not understand, tends to arrange itself proportionally in these ratios of 382 and 618. You see it in your own body construction. You see it looking at the fib spiral shape of all galaxies, the very chaotic systems, the perfect shapes like a snowflake, the sunflower seed. And what we can use this for is, as price action is developing off of one of these major pivots, is when we have part of it, we can say, okay, the rest of it is probably proportional in these ratios to the first part. So we've clicked on the bottom, that's where we start. Excuse me. My throat is sore for some reason. And we want to pull our price level, the 382 level, down to, here's our first impulse off the bottom. So whether that stopped here, here, over there, doesn't matter. The top of this, so let's just pretend like none of this price action out here exists. And here is our first wave here. We start at the bottom, get right on that bottom there, and we pull our box so that the 382 is right on top of those, and we find the high of that move, and we put our price on it, or our 382 time tick on it. So here's our high right here, and in both time and price. Let's make sure we got her on there. Okay, so there's the price level right there, and there's the time right there. And what do you see? So we started at the bottom, we drug it up so that the 382 level matched the highs of our first wave, time and price. Here's the breakout. Here is one tick before the high candle with the time. And if we scroll out a little bit more, look at how high price rose to this level as we work our way down the chain. So this right here told us that these points in time and price were going to have some form of significance. So I mean, then let's go to the end of our Gann box and look. It's the end. It's this bottom. It's the end of this whole first move. And then boom, price broke out even farther. Once this move develops, now we can drag this along. Let's go to the end of our, here's our first swing. You know, here's swing low, swing high, pull back, continuation to the next one. Pull back, and then on it goes to the high. Pull back, on she goes. So we can drag this along and find, you know, so now here we drug this to the end here. Now look at our 618, it's right on the high, and there's no magic way to use this. I mean, when it first starts off, this is the basic right here. It's the 382 goes to the top of this. You know, once this is done, and there, you know, it price rounds over, it's nice and flat. Price rounded over, it's nice and flat. You know, price came up, it rounded over, it's flat. You know, the trend is over. That first impulse wave, I mean, I say oftentimes in our free Discord, where you're welcome to join us, where myself and other traders are discussing these things on many different things all day long, every day, free. But as this is developing, so I mean, we just pull this to that high and that price level. You know, this right here is accurate to the tick on this price. I mean, that is very, very accurate for a price target. But if we just keep dragging this along, so let's drag our 382 and this right there. I mean, it doesn't matter. I mean, the 382 in the 618 doesn't matter if it's on this side, top, bottom. It's just proportion. I mean, 618 plus 382 is 1. And that's what I mean about it being proportional. One cycle is 2 parts. One part is 61.8% of it in time and price, and another part is 38.2% in time and price, typically. Not all the time, but very frequently. So let's say that we had used this method and we had marked this out. We'd be looking for our, well, first we would be looking for a high either right here or right here, and we did get a high here, and then what did you get? You got a pin bar candle. And you got a retrace right at this time tick. But if we keep working our way along, so now let's set it at this high. You know, we could, you know, set it at this price level. This price, I'm looking at this high right here. That's all that matters. is swing high, swing low. Or these points right where the cycle ends. You can see the trend end right at a reversal point. It would be the best way to put it. But we can just keep working our way along. So let's put the 382. We did this high. Now let's do, well, this high right here. If we put it, let's ignore price for a minute. Let's just look at time using the scan box. We got this right here on the high tick. Right here gave us the high. Right here gave us the high. Right here gave us where it was going to break out. We could go to the real high right there and look, high, pretty darn close to the low here, right on a high. You know, we could just keep dragging this along where we're matching any one of these up to a significant high or low point in these trends, and when you find that all of them match up with highs and lows, it's proportional. So like even like right here, we matched it up with this high, that low, right there. Now let's drag it along. Let's go to this low. Matches right there. And the farther that you go along, it's just not going to be very useful. So first we did this this wave right here. So now let's bring our 382 up to this price level. And you can see that price came up to the next one, the 0.5. You know, you got this big pullback, and let's set the time cycle on it. Let's set the 382. So now we're going from this low still, and we're coming up to this high right here. The 382 price level's on that high, and the time tick is on it. Let's get it set right on there. And it's not giving us an exact high, but it's giving us this exact low. It's giving us this exact low, and it's giving us this exact low right there. And then if we look at it, let's do the same thing that we did just a minute ago. Let's slide it on down to right where the trend changed. So now we got our 382 time tick right here. See, it matches nice right there, matches right there. These are the same ones we looked at already. So let's go on to the next one. Let's look at just time. Just time. So let's take the 382, let's set it right on that high, gives us this high, gives us this breakout right there, and gives us this high. You can just keep working this along. I mean, this is not some magical thing that just tells you exactly when and where price is going to reverse. But let's take this scenario right here. You have a horizontal level that you're looking at. And you're looking, you know, let's say that price broke out from right here and came up here and you sold because you had that high marked out using this box. And you said, okay, I want to buy when price comes back down to these highs, even though it wicked way back down. You could use this tool to come up with points in time to be looking for the candlestick action. Or like right here, price came down to this macro momentum curve. So let's take our Gann box and let's use it in reverse now for this downtrend. So here's the high right here. Let's take our time tick for the 382. Here, let me zoom in a little bit. Let's put our 382 time tick right on this. Here's our first push down. That's why I use these Degen-Dynasty candles a lot of times, just because they're easier to see. When I'm actually trading, a lot of times I just use a bar chart. But for this here, I just want to see where's the low. Now I put the time tick on that low, and you know, you can see that, I mean, we are one tick off of the absolute high. So there's our time right there on that low. Look at the end of this, is right on that guy. And if you look here, we're one tick away from the high there. And then if we take our price, this is why I shorted Bitcoin, by the way. Oh, here we get this back up to the high. And am long on Bitcoin once again because we're at that macro momentum curve. So let's drag our price. Let's ignore time for a minute. Let's drag our price, our 382, down to the bottom of that. What price target does it give? Awfully close. Awfully close. And now let's start taking our time. How could we have gotten this time right here? Well, as you're working this along here, you know, when prices was coming down to this macro trend line, it could be a trend line, it could be a horizontal line. I also use spider lines. I have a video just on spider lines. When I see convergence of these things, I'm saying, okay, price is coming down to here. I expect a reversal at this momentum curve or at a trend line or some major, support or resistance. Like here's support. Price come down to it, you expect it to bounce. Here it comes down to this macro momentum curve, you should be expecting it to bounce. So we should be looking and saying, okay, let's start taking these. We got this set at the high up there, and let's start matching these guys up with other highs and lows. Could be this high, this low, this high, that high, this low. It's just any swing high or swing low, and see if we can find, a spot that we should be looking for where price would reverse. So here we've actually, on this candle, let's just set it right at the bottom. Let's look. Right here is a bottom, and it pushes up. Right here is right where the trend drops. Right here is where the trend drops. So as price came down into here, there's a lot of confluence there. And then how about our current push up? Let's grab our Gann box. Let's go from our low. Let's set our 382. Or wait a second here. Our 382 price level. And really it's just the bottom one. These numbers here, are equal, So I set the bottom one with that. Let's take, here's our high bar right there, the high of that push up. Slide this over. Set that on there. There, right to the tick for the high. Right to the tick, man. Let's look right here. Right to the tick, big dip. Right to the tick, a big rip. Lethal, accurate. This is an hourly chart. And in a minute we can go down to a 1 minute chart and do the same thing. And I got two methods that show the same relationship. All this is it's an equal relationship in proportion. So did price reach this target? No, it didn't. But the lowest target that you should be expecting is take the highest one of these. Take this, the 618, and set that at the high. This should be the lowest that you would be expecting if you get, a continuation signal bounce. If you expect it to go higher, now let's go up to the next one. Let's put this 0.5 level at that high. Boom. Right to the tick. You cannot predict time and price. You can't predict what's going to happen. But what you can do is you can just use the simple things that exist in nature, where for whatever reason we have no idea how big this swing is going to be or whatever, but we know that it will most likely be proportional to itself. So that is how you use the Gann box. I gave several examples just to drive it home. It's here is a low, a swing low. Here's a swing high. It doesn't matter if I'm going this way or if we're going this way. Here is the high of the first push up in this swing, the impulse wave. I always say that the ancient oak lives in the acorn. The future oak tree, its proportions are part of what it's created from. You know, maybe it's because traders, trade these range and they just double it. I have no idea. I attribute it to natural law. For whatever reason, things just arrange themselves proportionally. So you start at a low. You pull this up, and you find the highest bar of this first push up. So let's say price pushed up here and started to pull back, and you are saying, okay, this here is a likely high. And you don't need to have this exact, because this is just giving you a spot, a price level, and a time point that you should be looking for something like this, And then when price breaks the low of the highest bar, right here, you got these spinner candles, or whatever. Maybe you're using a trend line. I use spider lines. They're dynamic trend lines. If you want to know how to draw them on any chart, in any time frame, you can look at the video on the channel. So this here is giving me levels. So as price is developing, let's say that, I take this long trade. And I, think we're going to have a larger move. Price pushes up and it pulls back. So here's the first thing that I'm going to do. I'm going to take this tool out. I'm going to match any of these levels. I'll just start with the highest one. We only have this right here. So like if we go to replay, well, we're on the spot chart, so we can't use it. And I'm going to match. I'm going to say, okay, what level up here should I be looking for a reversal? I could start matching with this one, and I could snap a line. Go up to the 0.5, right there. I could snap a line. Lethal. Accurate. Could go up to right here. Snap a line. Now time. Here's the highest bar in the move, or maybe it's right here. You could try them both. This is just giving you points that you should be looking for a reversal. So I mean, this right here, here's the high. Here's where it breaks down. Here's where it breaks out. And here's the high. Where should I be looking for? Like let's say right here, we see that this is breaking down on a smaller time frame. Where should I be looking for a reversal to re-enter? Right at in this time period, right here. And here you got this nice big wick down. Continuation. Where should I be looking for a top? At any of these price levels that we use this box to come up with equal proportions. Now, let's start to look for more time confluence. Let's drag this down. So here, if we go to the end of this trend in the breakout, here it's matching up with the high. And look at the end, right there. These are all, we can use this 100 ways. So now here I'm matching this up right here. I mean, you want as many these to match up with significant points in the price as possible. Boom, here's the low. Slider on down. So now we got the 382 on this low. This matches that high. This matches that low. This matches right where it broke down. It is lethal, accurate. Here's the end of this cycle. Here's the low. Here's the high. Here's some future point. Let's go for price levels. So let's drag this down to the high. So let's use this in reverse to the short side. Here we're at the high. Here's our first impulse wave to the downside. So what is the farthest level that we should be looking for? Right there. Just lethal, accurate. And whether price bounces or not, now we should be looking for continuation signals. You should be looking for a change in market structure, whatever your entry reversal signals are that you use. And I mean, I know what mine are, and I talk about them on this channel, and definitely talk about them constantly in our Discord, link in the description. So I mean, these price levels will likely be respected even coming back up, you know. And let's say that price comes up. Now, let's say that this ends up being the low, and we went down to, let's go down to the 1 minute. Let's just show how lethal accurate the Gann box is. I said I was going to talk about the octave method, but I don't want this video to be too long. I do have two methods, and I'm going to give a very brief description after we show the Gann box on the 1 minute, and we're going to have to do another video on the octave method, but I'll show you what it is to make you want to know how to use these things to find these proportional relationships that you can't predict the future, you know, but you can predict points where these things will be proportional. And if you assume that they are going to be proportional, which is why I think TA works on past price action. When you're doing technical analysis on past price action, you could have 10 people sit down and do TA and just use the replay button and get 10 different answers. But when you look back, there was always some magical relationship. That's because this stuff is proportional to itself. It's just a natural law. I mean, a lot of people attribute it to the law of vibration or whatever. You still need to understand basic strategy, and you use these things as tools to come up with high quality points in time and price to take your entries and exits. You know, like I'm using, you know, this momentum curve. It could be Fibonacci retraces, you know, or whatever it is. So now here we are on the 1 minute. And let's just go to something else. That's not Bitcoin. Let's go. Let's just go find something. Here. What do we got on this list here? Let's find a dumb meme coin. Some obscure but still traded meme coin, and we're gonna do this on the 1 minute. Let's go to Grok. Oh. There we go, Grok. So here is the Grok chart, a 1 minute chart. Ooh, look what we got going on. Oh, it's good here. I thought we had a reversal underway. Well, actually, we kind of do. Sure, we do. Because what happened here? We're on the 1 minute chart. We changed market structure. Look at this. You know, support. But what do you got here? Price is trending down. Break of structure. Let's hop out to the hourly ones here. And let's just do this on Grok here, real quick. So I'm gonna give here. Let's take this right here. So here is the high, and should be able to start from either one of these. But you got to look for the confluence. And there is no magical science to this. You know, is there a reason that here's the question I have, is we have clear support here that price is bouncing off of. We have a change of market structure on the small time frame. We have this curving down here to where it's about to culminate. Time and price will be square. Likely going to see a reversal here. So when should we expect this reversal? Is there a reason that we should expect it right here? So I mean, if we set this here, I mean, look at this right here. And here I'm still on the hourly. We'll go down to the 1 minute in just a second. Here we matched it up with this high. We're matched up with this low. We're matched up with this high. And it's telling us that we should be looking for a bottom right here. Now, let's use this in reverse. So here's our last downtrend. We're still on the hourly here. Let's take our Gann box. Start at the high bar. Is there a reason that we should be looking at this price level? Well, there is, right here. What's the lowest price level that we should be looking for without a larger retrace? Down here. So you should be open to a liquidity grab down here. So at what price levels should we be looking for a reversal? So here's this first push down here. So we start, here's the deepest. Here's this one. And well, we'll still take the next one because it'll be useful on the way up. And look at what it is. It's this, supply-demand line, this support resistance flip. So this is Grok, a meme coin. TA don't work on meme coins. Well, that's because I don't think TA works on anything, in all seriousness. I don't think that you can just rely on technical analysis to just willy-nilly into trades and think that you're going to have some special edge just because price came back to some Fibonacci 618, 382, golden pocket or whatever. I mean, the price action needs to show that, that sellers are exhausted and buyers are coming in. You see the curve in the price action, and you see the the engulfing candle at a supply demand line like this right here. And what we're doing with this Gann box, and the reason that this is working on even a meme coin, which we're going to do this on a meme coin, not even the biggest meme coin, on the 1 minute in just a second here. So like when we look at this, where exactly should we be looking for this? So look at this right here. Let's look at time. So here's this low, high, low, high. Let's put our 382 time tick on that low. See how matches here, matches there, matches there. Boom. So this hour right here, we could very well see a reversal on Grok. We've seen it on our 1 minute. So we should be looking for a reversal. Why? Time and price agree. So now let's come down to our 1 minute. Here we go. What minute should we expect a reversal? Oh boy. Let's take our Gann box. Let's go to the high. Let's come down here. Let's find some nice confluence. Should we expect it this minute right here? Maybe. Maybe. We're looking for some nice confluence. I think we're gonna take the, well, here, let's just use it just like this. I was gonna say we can take the last little high. I think it's gonna reverse right now, just like the hourly told us. Now I want to show something here. Look at this. This is the 1 minute. See this impulse down here? This is the impulse, the initial impulse right there. Look at what price came to. The low. I mean, we're talking about to the tick. No, that's not time-wise. If we went time-wise, here you got nice confluence, this low, matching that 382 up. Here's the breakout. Not much matching up right there, but you do have that. I mean, this is the 1 minute. So let's say that this was the low, and should we be expecting a reversal here? I think we very well could. I think we very well could. So I mean, if you get a reversal signal, it would be a worthy thing. So now let's match this up with this more significant, more recent high right there. So let's look at that. So there we got that high. We got this. Let's try sliding it over to the low. And maybe we come on down more. But you can see how proportional these things really are. So that's how you use the Gann box. I mean, if we come back here, just find just any random point on this chart. Any swing high or swing low. So right here. Let's just take this one. Here's the swing low. Last example. Start it right there. Here's the high up there. Now look at this right here. Here's your high. Here's your high. Price never made it up there. But I bet this high right there, awfully close. This high and that high both match up. Time-wise, let's get the time. So here's your first impulse. I mean, if we put it right there, it's going to be pinched so darn tight it's not even funny. But let's zoom in and do it. We'll find the end of our very first cycle. Look at that. You know, this is a 1 minute chart meme coin. See, there's your high bar right there. So let's take our 382 time tick. Put it on there. So you can't say that you don't know how to use these things. I've given about 500 examples. And if you like this kind of TA, there is more where that came from. I'm just going to give you a 30-second demo of the octave method, which is literally just showing the same exact thing. But we're going to have to do a separate video on that. And let's grab our fib retrace tool here. And let's start right there. And we're going to, well, you know what? I don't have this set up. The octave method's going to come next time. You're just going to have to check back on the channel or come into our Discord and you'll see it posted in there. And we will talk about the octave method the next time. I don't want to rearrange my tool there, but that is how you use the Gann box to time reversals. So I mean, if you have a support level that you're looking for a reversal, you can use these timing methods, and you can use these things for you know, price levels for high quality areas of interest. Hey, if you like this content, like, share, subscribe, be greatly appreciated. And until next time, trade well.